Good morning, everyone. So the title today was One Step Forward, Two Back, right, which is the definition of a self-correcting uptrend. Keeps moving up, but constantly putting into question whether it can continue to do that. So yesterday, as things backed off after pushing up, and it's one negative bar within the context of a trend that continues to advance ever so slowly, grinding. And what we have here, just looking at this, meets the definition: overlapping bars, tails on either side. Uh, if we were looking at the Qs or spiders, gaps. Um, and so it's just one that just continues to put into question the trend's ability to advance, but it does so. And you can see what's going on this morning. Things were following through from yesterday, and the news came out. Um, Inflation news was good. And dollar is dropping. Other currencies are going up. Interest rates are falling. You can see over here. I suppose some hopes that the Fed is going to do something. In any event, in the short term, we will just continue to look for the same to continue. Right? Buying dips, erratic price action, um, commission generators. You got to give them more room to wiggle, because that's what's going on right now, or just trade other things. So the weekly still looks like it can go higher. One of my comments this week was maybe just too many people are seeing what's obvious, right? Meaning the trends are up, markets won't go down. We had, almost a month of sideways, a close above those highs. You can see here, which can only suggest one thing: it's going to go higher. And while the upside would be somewhat limited, I mean, we don't have what we call a big void. There is room to go up before it reaches that resistance area, but the uncertainty based on tariffs in China and all of that stuff just continues. So um, it was the reversal on the economic news. Prices come up to the prior high. Sellers are there, knock it back down, and we'll just see how this unfolds today, which way things are going to, end the day, and reactions to support and resistance and so on. So at the beginnings of what we have so far, and is, we call it a topping pattern or an upside shakeout. We'll just see how far prices could advance, from what occurred after the news or not. So congestion there, we'll see how it deals with it. If it can't go much higher, we'll assume it's going to retest these lows or just chop sideways within this new sideways trend here, right? Intraday. We can't change what it is. I know it's frustrating, but been through it many times over the years. You can see a similar pattern in the NASDAQ futures, pushed up above the recent resistance. Things give back. Some things, stocks gave back more, meaning look more ominous. Look at this. Twitter came up. Something was up with Twitter or X, whatever you call it. I couldn't bring it up before. Anyway, it's up now. So similar patterns, got room to go higher. One of the things I mentioned yesterday was, look, do we get a close below a prior day's low? And as the beginnings of to say, hey, you know what, this hasn't happened. Now it's happened, like here, and you get a little bit of a pullback. So closing below a prior day's low doesn't change the trend. Right? But we look to pivots, we look for congestion areas, and again, just sideways, back and forth, sloppy stuff. So here we put everything in perspective, and where we came into the week enthusiastic that maybe we could get some blast off, you know, toward new all-time highs. clearly there's continues to be hesitancy over the news that we've been hearing forever, seems like. And we'll see as it comes down to some support where buyers step up. Now that we've got a little void up above here, so this retracement and the move down would suggest lower, but we've seen how many times where it begins to back and fill on some support, buyers begin to gain confidence again and take it back up. And so, that's the essence of the self-correcting uptrend. Whereas it looks somewhat ominous, right? On a smaller time frame, nonetheless, as it comes down to some support, it back and fills, jiggles around, buyers step up again, and up and away. So again, put things in perspective. While this looks like, okay, it could break lower, and maybe it does, show me the evidence of that. And even if it does break lower from here, I've got a weekly trend that's strong in a giant wide trading range. I got a daily trend that is self-correcting, as mentioned. It's in an uptrend. Buyers are going to step up again. And until proven otherwise, it is what it is, right? Right? Anything else that looks like maybe it's different. So one of the things I was looking for was the underperforming Dow to play some catch up. And so as it cleared those highs and it looked like, here we go, right? Sellers came in and knocked it back down again yesterday. And so now we've got what could be a breakout failure. Right? So one bar doesn't provide us with an action point. It's something we take note of and say, after a resting period, this should not have had such a rejection. But if it can go sideways, right, maybe for another day, and maybe it can still continue higher. So the message is the same. And that's one of the reasons we look at these different markets. One is to see if there is some other information that would provide us a greater bias one way or another, or can one market be a greater opportunity than another to trade that? And as we look around, the message continues to be the same. Hesitancy to go higher, overlapping bars, tails, uncertainty, and it's a market environment for swing trading, unless you're giving things lots of room and you got tremendous patience, which I tend not to have for this kind of environment. It's a more difficult time. And so it'll pass. Russell, which looked like, well, it was leading the way, had a little bit of a move up. If you look at the IWM, it hit its 200 MA, an obvious place, right? So the high of that bar, you can see it's a little bit above on the futures, but looking at leveraged instruments if you're trading this, it makes sense to know where it is, but you have to look at the underlying to really get a clear insight and, from my perspective, bias as to how to trade the leveraged instrument. So if you're trading leveraged ETFs, leveraged, for semiconductors or whatever, which is great for, day trading and short-term trading, you got to look at the underlying to see where your reference points are. So you could see how this became such a self-correcting uptrend. So many people looking at the 200 MA on the daily chart, prices go up several days in a row. There's going to be sellers there, and you see the reaction. So one red bar doesn't change the trend, but now we've got a little gap down, maybe a little bit more than a little. It was more extensive. You can see where the cursor is, but gapping down onto minor support. It was resistance, becomes support, basic stuff. And so came down there, are buyers. And so we'll see if, does it jiggle around in here? What's it going to do? So with the gap down, it's unlikely it's going to come down to where I have this. I think so. Unlikely to come down where I have this alert set right there, but a more significant support area in the 20 MA. Now, just want to see on the weekly chart. It's right at the top of last week's high. You can see that right here. Right? That's where the cursor is as it lines up there. So on the weekly time frame, no damage done at all. It's just moved up to some reference point. It's pulling in a little bit. Maybe it's going to jiggle around, but look, major support is down here. This is just our common sense, systematic analysis. It's moving up. It hit a reference point. Pulling back is normal. Pulling back to major support puts the trend in question, and a violation of major support ends the uptrend. Now, the good thing about this particular trend is you've got a pivot here, you've got a pivot here. So even if things come down, which would be a relatively significant, and you could see it would be coming down here would violate that weekly low. Right? You can see the cursor on the weekly chart. Coming down here would violate that wide range weekly bar. However, these being support, right, this would present itself with a short-term opportunity for those that are active like us. I don't think it's coming down here today. I believe it would be relatively impossible without any other ominous news. All right. So same story cues, looking to see where it's going to gap. It was lower, and you got several clusters of bars there, and you can see all the pivots and mess on the 65-minute chart. And so far it's holding above that support trading range, running in place, messy price action, another picture of uncertainty. Transports, but a nasty day yesterday, and this is what would give more of a hesitancy or belief that something could correct more than what we're looking at these other time frames. And like, okay, so one big red day, not even a big red day. That's a big red day on the transports. But it did come up to a resistance area. And so when we look at correction days, one of the things we look at is it a big bar? Well, define a big bar. Well, just look to the left and the instrument you're looking at. That's a big bar compared to these. So you compare this versus, the rejection on, the S&P or whatever, it's not as big. So this is clearly more potent reversal. Still, it's at resistance. Let's see how far it goes. One bar doesn't change the bigger picture. Now, if the weekly ends with that topping tail, which we don't know if it's going to, that would give a little bit more of a bias toward this trading range possibly breaking. Right now, we're just looking at what is, and I just drag this down here, and it's a trading range, and right now it's not down at the bottom of the trading range, it's around the middle of the trading range. Again, we're putting things in perspective so that our emotional or a bias or what we want to happen is in alignment with what is. All right, interest rates, moving down. You would think the markets would like that, but transport's coming down, and these wiggles have been going on forever, right? Transport's going down, interest rates going down. That implies a weakening economy, interest rates going up, transport's going up, strengthening. Where is that in relation to previous data? Could be ways back, it could be more recent, and you can see here, just another big trading range of uncertainty, and it almost changes day to day, week to week, and that's what kind of makes us, I don't know, crazy, uncertain, but nothing we can do about it, but just say, what are we going to do? Sit on our hands, trade things that clearly we find that are better right? Yesterday we covered bottoming patterns in MT Live, which there are many more of them, but we also see that based on this erratic price action that, we discussed yesterday in the room, there's a lot of break evens, tight management, because, it's like the market environment. And I'll say it again, it is what it is. Right. So similar patterns, SPY, right? Little bit of a rejection. You can see the size of that bar, not a big deal. Yesterday, it didn't close below a prior day's low. Right. And at the low, it's gapping below several bars lows, coming back up again, right, to the bottom of the bar. And we'll just have to see if it rolls over, a little bit more downside, or whether it's going to be a red bar ignored. Right. So we're gaining information on a short-term basis with a weekly chart that's positive. It's getting close to its destination, but the idea was it could make new highs. Maybe not at this point. Um, and so this is tight. And look at the size of these bars. When you see bars like this that are relatively equal in range and they're grinding like that, it's just a tight self-correcting uptrend. So we'll see where today ends. Right, SPX, and I'm handing it over to Dan. This chart's getting kind of messy here. Things are tight. So still big open interest at 6,000. It's going to open up around there. And so up or down, average range, give or take, these strikes are beyond the extremes. So I believe it isn't getting down there today. Could it get back up above yesterday's high? I suppose it could. I don't know what's happening without any news to drive it there, but typically a pattern like this would not get back up there. So these extremes are what we'd call the safe areas, right? Meaning, so now with that in mind, you look at what's happening and, after the open, which way things could go, kick extremes, rejections, and so on, and we'll pick what strikes. Well, yours, Dan. Oil higher. It got rejected. Yeah, I should have covered the oil and the gold, but I was talking too much, Alex. Why is oil higher? I don't know. Why more buyers than sellers? We had discussed this bottoming pattern, so technically it supported that it was going to go higher. Um, you know, and that was one of the reasons why there was conversations about buying the Jets ETF earlier in the week and these airline stocks. And while the pattern supported that, I said to Dan, Dan, I don't know, man. This oil is breaking out. I don't see how they're going to continue to go up with oil going like that. Not that they don't diverge at times, but that was my hesitancy. And you can see they reversed yesterday. Go ahead, Dan.
Good morning. But yeah, what moves oil is obviously supply and demand. What moves that? I think the two broad categories are economy, demand for oil, and secondly, um, OPEC. They're always talking about production cuts, artificial messing with supply and demand, and then finally, war fears. Exactly. That's what I was going to say, Patrick. So yesterday that Trump said things are deteriorating with Iran settlement. So yeah, exactly. And then the market technical chart is just the sum interpretation of all those factors. All right, I saw this GME gapping down. There's some news. I think they're doing a secondary offering. But that's an igniting gap breakdown. That's a no-brainer call spread if there's any juice there at $30 and higher. Alarms, TNA, we have some naked puts. My low alarm went off, so I say just move it 5-minute low. We're almost at max profit anyway, so it doesn't matter. NXT, and yeah, Greg mentioned a lot of break evens. But yesterday I haven't been feeling comfortable about this rally all week, even though it's higher, grinding uptrend. But yesterday was the biggest crack on the hourly retracement, even though it's still in an uptrend. So I was tightening stops. NXT were in trail mode. I had a low alarm go off, but I don't see any. But another grinder. We got a nice open profit. Oxy, we it's my pretty not seeing gaps here. All right, there you go. There you go. All right, Oxy is just it's an inside gap. Our stop is yesterday's low, so that's totally fine. Let me reset the alarm. These bad ticks go off and set my alarm off. All right, go back to NXT. I don't see any prints. Oh, so GME didn't show the gap down. Yeah, yeah, yeah. Here you go. So that's why I was looking at GME. Yesterday would have been a call spread. Today that's down too much. If this sells off to 22, I'll be watching that for a put spread. But as of right now, nothing. TTD. Greg mentioned yesterday. We can maybe short 30-minute low would be ideal. PayPal, we're in trail mode. Had a low alarm go off, but it bounced, so I reset it. We have an open profit there. You can see the kind of patterns we've been trading. This is an inverse head and shoulder and an uptrend. And we're going to have that empty live topic in the near future. Because you can have inverse head and shoulders as a bottoming pattern. Well, you can have them in any trend. They're most likely in bottoming patterns, but you get them as consolidations also like this. Look at cat. Cat's another one that's inverse head and shoulder and an uptrend. So that's on our long watch list today. Actually, it's gapping down the fucking change. I'm gonna set an alarm 363.50. And I already did yesterday, so good. Gurr. We have a put spread. I had a low alarm go off, but we've got an open profit. Stop is still way down here, so we're totally fine there. If this were to take out yesterday's high, then that and or just even close deep into that bar to give us kind of a pseudo 180, then that would be a good long for tomorrow. I'm gonna set an alarm at 22:50. All right, so those are all my gaps for today. And there's not many earnings. OXM. Remember I said yesterday that this is rare to have a big igniting ugly bar into earnings. And sometimes you think that there was a leak and now it's gapping down. So whoever dumped or shorted it was correct. Oracle. This is what I call bullish as can be gap, but possibly excessive short term. So 30-minute low, possible call spread. Today's Thursday, so it would just be a 1DT year, which I like. Yard gapping way down here. Yiren Digital, never heard of them, but no pattern. Love. This is in Sam's ETF, the old Love Sack company. Just going, gapping up a little bit, 2080. I don't know, there's nothing to do there. This one was up, now coming in. Look at the monthly is a bottoming pattern, but you don't have a good void. If this were fluid all the way down, just straight fluid monthly, then I would say that's a bullish W bottom with a possible big target. This was a nice entry right here when you have this little 1, 2, 3, 4 right here after breakout. That was beautiful entry. All right, so nothing there. Miscellaneous things. GoDaddy. We're looking at short of bounce. Sting, Greg mentioned yesterday, bottoming pattern. Let's watch that on a pullback and or 30-minute high. CMG, we've been watching for bottoming action for a while. I'm going to set an alarm at 5190. The cat we mentioned, GEHC, 1, 2, 3. I got an alarm at 74. Oh, Boeing, yeah, poor Boeing. Passengers. This India jet crashing. It's an ugly gap. It's an ugly gap. I do not have a bias right now. It's up a lot. Look at this. Weekly is a climb, so it is ripe for pullback. I mean, too bad it happened on that bad news. So obviously here are some related companies. Nice bounce off the lows though. Maybe some news already came out about what the cause is, because obviously these companies are getting hit because of expected lawsuits. It's a bearish gap. These are all extended. Some news in the semiconductor space. NVIDIA, TSM, these are all extended. These are all call spread ideas, 30-minute low. GME, we mentioned. Oklo, I think, doing a secondary offering. That's a bearish gap on a 15-minute chart. This could be an excellent day trade short. If they can't bounce, maybe 15-minute low. Let's also watch, I would minimum wait 30 minutes if I were to do a call spread. But if it can't bounce and cracks, sure, we could do a $70 call spread for tomorrow. Vintage is an IPO coming out today. I don't even know what they do. Net, I think had a secondary offering also. So this is a fantastic candidate for a call spread. Let me put him in this middle chart. If we can, just spitballing here. I don't want it to retrace more than 40%, and then boom, there's 40% in one click. So we just gotta wait and see. And then, all right, look at this solar. I don't know. Wow, this looks like a pump and dumper. Look, when something trades like garbage and just pops up and immediately gets slammed, that's a sign of pump and dumping. Cuervo Gold gapping down. We were in trail mode. Let's fill a bounce here. What's our cost basis? 80.65. So we still have a nice gain. Q's breaking out of the bullish 5-minute pre-market range. CARR, Greg mentioned the other day. Let's just sell this Cuervo. Gapped under that bar, minor resistance. Cuervo Gold. update these later. Helix is stopping out at a small profit. Where did I get filled up? Oh, LMT has bouncing. All right, let's I actually had an order out. So, this was our went against us yesterday. We're getting a little rally here, so we can, we all obviously always use the charts, but let's watch this to start getting out on a bounce. Yeah, see, so I made the good decision, right, Alex? Getting out break even yesterday. Secret, we said we got to back test them, but the reason I got us out was the market and I didn't like XLF.
That's
So
very short term. It doesn't mean it won't go up by the end of the day, or
I don't know,
you
I'm
know,
just
if you're following a particular time frame, that's where you're stuck.
well, but I'm giving you the reasons why I tweak it. A D line negative 860. Oh, all right, the sting, let's watch. Bravo. Bravo. Look, there's a breakout failure we got into. So that is just a total failure. And that was another reason I've been tightening things, because I've noticed a lot of these type of failures.
But it's a one bar failure, Dan. So I
Right.
agree with what you're saying, but you have to. This is a bottoming pattern, so a little bit better than others, and so looking at those as they are. I mean, one bar doesn't mean it failed, right? It's whether it actually follows through. Now, whether you want to, you know, see while you're holding the position, is it going to follow through? That's fine, for a larger area of support. Is it going to violate that? And what makes money management so important, because your loss is still going to be reasonable and you're willing to give something more room. There's nothing wrong with that. It's more of a personal choice and how you want to manage it. But
Yeah.
that hasn't totally failed yet.
Well, yeah, that's a longer discussion. I've had that with Alex before. I would say it's a failure if it trades under the green bar. So it's an early alarm where the stop is 138.88. So it still has a little more room to go. But to me, my definition, we'll talk about it later. I've had this talk with Alex a lot of when does a breakout become a breakout failure, as opposed to danger Will Robinson, it shouldn't have done that bar by bar. That's the top.
It depends on the time frame being used. Intraday, yeah, it's failed. So you have to define what failure means.
That's exactly what I just said. What does failure mean versus danger bar by bar? I don't like it. I'm nervous.
That I know, Dan. And that's why you do credit spreads as well as you do, and I don't. And so as you're looking at that from a swing trading perspective, first of all, it's not in an uptrend. So it's not the strongest thing out there. So whether your trading plan defines one bar red bar as enough in a bottoming type of a pattern because they are questionable versus something in a strong uptrend, and one bar would be ridiculous to say, an immediate, move up and a red bar would be a failure. So the conversation leads to more advanced position management and personal preferences, you know, but just saying, is something penetrating minor support? It's not a big deal. Goes down to major support. Now, you know that it shouldn't do that if it was truly strong. And so how much room do you want to give something, again, is how you personally want to manage it. But ultimately, it's really violating a major support area or a retracement all the way to it that truly says this has failed.
He was holding the best, but no pattern for me. Diamonds IWM, the weakest. Obviously we got Boeing drag, although it's bouncing. Oracle, man, what a beast that is. Yeah, that's yeah. So I would absolutely not sell a call spread on that or Oracle. It's not ready. That's wow. That's Sting. Oh, okay, good. Now we can do half lot yesterday's high.
Thing has a big spread for a $40 stock, 40 cents. 47 cents at the moment. Russell may take out this pre-market highs here to try and fill the gap.
I reset my alarm on that thing, Alex. Yeah, now I got my alarm at 50 spot 80. So that's what I did well.
User and filling the gap here. First one.
Preferred. Came close to the stop, but not yet. NOV stop. That stopped this morning. NOV long stop. Small profit. Oh yeah, perfect. Yeah, yes, watching on a little pullback. Right, the net's flying. Yeah, let's watch the next pullback here. Next machine. Yeah, now it's first climb. It's following a climo, which makes it less attractive because it could those have higher odds of failing. But it's a watch. Sure. I love it when they try to bounce and then make one new low reversal. Not falling. That's what I learned. 71.65.
What the Russell futures would have stopped under the prior 5 minute bars low. You can see the 5 minute here chopping around. The prior bar was a bottoming tail bar, it's taking out the highs. I don't know that it'll fill the gap, but maybe halfway toward it. You can see the daily chart is on the top of that bar, that support there.
RWV. Uh-huh. It's even better now. Better top. I mean, this just so clearly shows supply and demand on the breakout. Crazy moves up, and now it's in this tight range for a bunch of bars. It's done. But now there's no juice. Man, the 180s I wanted to sell for $1 yesterday or 20 cents. Next week to get $1, you got to go to what? The 192s. 195s. I'm gonna do the 200s for 75 cents. Let's see how much buying power that takes. Or just short the stock. Wow, it only takes $1,470. All right, I'm in. This could be a short watch. Then stop buying.
Would it make sense to buy a put option for next week?
They're crazy pricey is the problem. I mean, go look and tell me what you recommend.
I'm just looking at the pattern. I don't, where's the option pricing goes? I don't know. If it goes down, don't they have to go up in value? I mean, I don't know how much is it pricing in,
No,
you know,
because you got volatility contraction and time decay. Those are the two things against option buyers. So no, it doesn't have to go up.
well, I don't know. If there's a measure that says on a particular stock, if it was to drop, well, if you buy something at the money, which is going to be expensive, I mean, I don't know. I mean, I'm asking you, if you buy something at the money and it goes down, I thought it, based on the delta of being you're supposed to move 1 to 1, that it's going to go up in value.
Well, two things. Number one, at the money is 50% delta. It's not 1 to 1. And number two, no, if it for what I just said, if the volatility contracts, which it is doing, right? Remember, it's been insane premium, and whenever you hear me say they suck the juice out, that's volatility contraction. And then you got theta, time decay, if it doesn't move quickly.
The question is on a stock like this, does it make sense not to trade options, just trade the underlying?
Unless you expect a big move.
Well, I wouldn't know. I mean, it's possible that it has
Right.
moved so much in a short amount of time, but
If it drops $20, absolutely you're going to make money on that put. I mean, you'll make more on short stop, but it's less less our return on capital because your cost basis is more. Hey, Robert. Well, Thomas, every option has a component of option pricing is volatility. So in high VIX environments or fearful environments, which includes CLIMOs up or down, volatility of those options is very high. So when things start to stabilize, volatility contracts. The easiest way is, remember, we sold those Tesla puts or we sell spider puts after CLIMOs because it's fearful, it's high volatility. And then all it has to do is not go down as fast anymore. And volatility starts to contract, like the hurricane off of Miami, right? The weatherman says, oh, it's starting to turn to the northeast. And then you start getting more comfortable that your house ain't going to get blown away. Man, this oracle's on fire. No, it's an option volatility, but option volatility is a function of the underlying stock, of course. And so when we talk about usual suspects, those are the ones that have high beta. So yeah, beta by definition means the volatility of the stocks. You got to draw, that's your statistics class. How volatile of ranges does this have